Hey everybody, this is Jim at SP500chart.com. It's about 6:20 on Sunday evening, December 9th, 2012. We're going to look at the S&P. But as always, before we do, I need to remind you that the website and this video are for educational purposes only. And nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy who draws lines on charts. So let's take a look at what happened on last Friday and take a look at the week in general. Okay, let's start out looking at a 30-minute chart. Kind of gives us a little bit of a picture as to what's been going on for the past, roughly month and a half. A little bit longer, maybe almost 2 months. Not quite. We're in a very pretty easy to follow downtrend. We broke underneath this bottom support line, which often is a sign of capitulation. Remember, when you're in a downtrend, the tops tend to line up. The bottoms can run ragged, and oftentimes the bottom that gets put in before the market begins to reverse is often a move that goes below that descending support line. And in this case, that's what happened. So next time this happens, we'll know, look, if we break that bottom support line and it is already descending at a pretty, decent angle, then look for that to be a potential first sign of capitulation. So we got that move, then we immediately, because we know that when we break down underneath a descending support line, it's no problem for the market to turn right back around and climb back into that channel. And now, if this had broken underneath an ascending support line as we've done here, then I would expect that support to have turned into resistance. But it's different when you have a bottom side break of a descending bearish line. So anyway, last week was a week in which really overall virtually unchanged. Okay, if we were to look at a weekly chart and we go zoom in to our weekly candle, there it is. And so really the week was very flat, but the fact that we are over that descending line, and even though we have now, let me get back to the chart we were looking at, and even though we've broken this, what I've been saying is maybe an important support line, but last week when this line just really got violated with very little, what's the word I'm looking for, with very little hoopla, very little fanfare. Typically when you have an important support line break, it does so in a more dramatic fashion than prices simply ignoring it and just kind of trading nonchalantly down through it. So this line right here is kind of suspect, but I'm leaving it on the chart. We did form what appears to be a little area of resistance that I mentioned that was around the apex of this symmetrical triangle that formed the week before last. You can see that the S&P got up out of that pattern, but then traded down in this little wedge. And this is where the week, I think, did fairly well technically. We got a back test down to this descending line. Even you could even say going so far as to testing the support line down here, not just the resistance line. And then immediately the market started to firm back up and ended the week having overcome this resistance area that was around 1416 or so. Now we're only up a couple points above that, so it's the old deal where you wonder, well, is this a sign or is this a head fake? But I take it as a slight positive that we are over this line right here. And keep in mind, we still have a target of about 1435, 1436 from this inverse head and shoulders pattern down here. So if we reach that level this week, guys, I would expect some resistance there. And there's also the potential that we may be forming an even larger pattern with 1435, 1436 as an important resistance level that, if broken, could signify some bullish moves upcoming in the S&P. We're not there yet. It hasn't happened, but just kind of a heads up, like we had a little heads up down here before this formed. So, guys, we really kind of ended up with, if we look at it on a weekly review basis, all I can say is that we identified this little descending wedge. We identified the breakout from that, and we all know that a back test is not unusual. We got the back test, and then we got a nice reversal off of that back test, a move up really from the lows of around 1398 to within just a few hours, roughly a 17 a percent and a third gain in the S&P within just a couple of hours. And then it looks like the S&P has just kind of gone sideways for a bit. Friday was not did not close at the day's highs, but I think it's looking fairly decent. Nothing really scares me here, and I will tell you once again that we are still looking at kind of the same thing, and that is support around 1390, 1391, and resistance around 1435, 1436. And while we're in the middle, you know, having come up from this level, excuse me, I think logic would probably sort of dictate that the next move is to test this line up here around 1435, 1436. So let's see if that's what happens coming into this week, the week that starts on December 10th, 2012. Now, let me say just a few words. We got this fiscal cliff thing looming. That's going to be some news that will likely have market influence. And quite frankly, coming up on the end of the year, there could be some tax implications with this as well. So keep your eyes and ears open. While we're in the middle ground between 1391 and 1436, that's an area where news can send us all around, okay? So I never say that news does not have an effect on the markets, but what I will say is that the primary, let me say that this time with the right emphasis on the correct syllable. The primary, I think, driving forces in the markets are not news, but are technical. But news has a tendency to bat levels around between technical barriers. So let's see what happens as we come up to January 1st, 2013, and let's just keep your ears to the ground, or listening for signs of rumbling coming out of Washington. And by the way, the unemployment was down 0.2% this past week. Don't get too excited about that. That's due primarily to about 500,000 people having been dropped from the workforce. So that's not a good thing, okay? There were some jobs added, but not enough to keep up with population growth. That 0.2% came from the fact that the denominator the denominator in the equation was reduced due to people dropping out of the workforce because they've either given up on looking for work or they've taken part-time positions, but for whatever reason their unemployment situation no longer gets factored into the equation. So guys, thanks for watching the video. Let's see what happens the week of the 10th. And let's see what happens going into this new year, 2013. Thanks for hanging with me through 2012. This is going to be interesting, so stay tuned. Thanks.